Hi, my name is Fred Passelli. I'm a CPA in South Florida, and I own Passelli Accounting Services, a CPA firm specializing in tax strategy, planning, and tax returns for individuals and small businesses. In today's video, I want to talk to you about the best and simplest ways to save money on taxes as a W-2 employee. So the first step in that process is figuring out, are you a W-2 employee or are you a 1099 contractor? So really the way to determine this, you would be a W-2 employee if you have an employer-employee contract, work agreement. Your employer tells you basically how many hours you have to work a week, when you have to work. It's essentially, do you have a boss? Do you report to them? Do you clock in? Do you clock out? Do you receive a salary? Do you receive an hourly rate? If those are all true, and then you would be a W-2 employee. 1099 is a bit different. We will cover that in a different video. But just to give some background, 1099 are independent contractors that normally get paid per job, sometimes per hour if they might bill the business owner, or other methods of payment. So once we establish that you are a W-2 employee, the next thing is now we want to try and save some money on taxes. So what tends to happen is W-2 employees tend to be a little more limited on how they can save money on taxes when compared to business owners. Business owners have lots of write-offs that they could take. There's lots of things that they can put through the business, depreciate, bigger tax deductions, really because they're running a business and they're just going to have more expenses. Basically, a lot of things will go through the Schedule C or the 1120, which are basically the corporate tax returns, or even the partnership or S Corp tax returns. But for a standard 1040 W-2 employee, we're going to talk about the simplest ways today that we can basically save you some money on taxes. So the first thing I want to talk about is basically accessing your company's retirement accounts. Retirement accounts are things like 401k, 403b, IRAs, 457bs, and Roth IRAs. So 401ks we'll use as the example. Those are going to be one of the easiest and best deductions you can take as a W-2 employee. Every dollar that you're going to contribute to that is going to reduce your taxable income directly. What that means is every dollar you put in, you do not pay taxes on that now. You will pay taxes on it when you withdraw it once you're past 59. But in this current environment, and if you're trying to save money now, that is one of the easiest deductions you can make. So an example is an individual, a taxpayer, is making $100,000. They now put $10,000 a year into their employer's 401k plan. That $10,000 is not going to be taxable, and it is going to grow tax-free, and that is going to have a compounding effect on the investment. Now, that $10,000 deduction is going to bring down the employee's taxable income to $90,000. You will now pay taxes on $90,000 versus $100,000. So that is going to be one of the first step of the most simplest ways to reduce your taxable income and save money on taxes as a W-2 employee. It's going to be retirement plans. Now, the next easiest step that I can say to implement is going to be health savings accounts. This is another plan that's also going to be a tax deduction, but instead of for retirement, it's going to be used specifically for health benefits once you do retire. Or there is a strategy where if you do not touch it at all and defer it all the way until retirement, you can draw on it as a normal retirement account. But we're going to have a separate video on that later. So essentially, the health savings account is another pre-tax deduction that W-2 employees can take that will reduce their taxable income. You can also draw on this throughout the year if you have to pay for medical expenses. Those will be tax-free as long as you pay through this account. The health savings account, normally you're going to open it with your employer. So it's something that you're going to want to talk to your employer about and see if they have a plan that's sponsored by them. If they do, normally you'll open it up through your HR. Then you will get basically an account opened up for you. And then that third party, you'll communicate with them with funding the account, contributing, and how to draw on it. Normally they'll give you like a debit card or something along those lines where you can actually use it that's linked to the HSA, and that's how you'll spend the money. So step one is look into your company's retirement accounts. Then step 2, we have health savings account. Step 3 is going to be very similar to 2, and it's going to be a flexible savings account. This is essentially similar to an HSA with the health savings account, but this is called an FSA, and it's going to be used for health related expenses just in the year of contribution. So an example is 2026 coming up, you open up an FSA. Normally it's capped to about 1 to 2,000 per year. You open up this FSA, every dollar that you put in there is going to be tax deductible, reducing your taxable income. The key thing is with this is you can use this money to buy qualified medical expenses. You have to check with a tax professional on what's considered qualified medical expenses, but examples would be possibly out-of-pocket medical expenses, medical things that you will need for treatment, maybe if you're a diabetic, the insulin, or other types of equipment related to that. So those are the first 3 steps. Now after that, the other steps would, step 4, we would pretty much look into, are you eligible to itemize? Itemize versus standard deduction is one of the main things where W-2 employees can save a lot of money. So just to give some background on that, standard deductions are essentially the deduction every single taxpayer gets just for being a taxpayer. Now, itemizing is if you want to go above and beyond standard deduction and believe you're eligible, you can tally up certain expenses such as mortgage interest, real estate taxes paid, medical expenses throughout the year, and if that amount exceeds your standard deduction amount, which for 2025 it will be $15,000. If that amount exceeds $15,000 for a single taxpayer, then you're going to want to take the itemized route. So for example, if you bought a house recently, your interest rate is likely high, your taxes are a little high on that house, and any sales tax you paid throughout the year, you are going to be able to deduct. You can only deduct those if you choose to itemize. So if you choose to itemize and the total sum of all the itemized items come to $20,000 versus the standard deduction of $15,000, that's a $5,000 additional deduction you would be able to take. So that $5,000 additional deduction would decrease your taxable income by $5,000, and that's $5,000 less you're going to be paying taxes on. Now, the last thing I'm going to say, number 5, is for W-2 employees, it's very important to make, if you have any investments in stocks, real estate, and you've taken a loss this year on that, make sure to report that to the IRS. Capital losses for the year have a maximum deduction of $3,000. That would be $3,000 off of your taxable income where you can pay less taxes each year. So basically the way that would work, if you had a $4,000 loss in year 1, you would be able to deduct $3,000 to offset your W-2 income in year 1. The additional $1,000 loss would be carried forward to the next year, and then you could offset that next year, 2026, with $1,000. That's called a carry forward loss. You can pretty much carry forward the capital loss as far as you want until it's completely exhausted. So those are the 5 main steps on reducing taxable income as a W-2 employee and how you can save money on taxes as a W-2 employee. Now there are some more complex methodologies that we could implement that I will have another video on the future about. Just some examples of that would be cost segregation studies, possibly opening up an LLC, 1099, and the biggest one right now is the cost segregation study, which is through real estate. But we'll have a separate video on that soon. I hope you enjoyed today's video and you learned a little bit about how to save money on filing your taxes as a W-2 employee.